You know what nobody is telling you right now? Sitting in June of 2026, while you're watching your electric bill go up again and your grocery receipt somehow gets longer every single week, is that three separate money changes have already started rolling through the system. And if you miss even one of them, it can quietly cost you thousands this year without you ever realizing it. And I don't mean someday changes. I don't mean maybe next year. I mean right now, in the paperwork, in the county offices, in the Social Security notices, and in the Medicare letters that most people set aside on the kitchen counter and forget about. That's where this is hiding. Now I want you to stay with me here because I'm going to walk you through exactly what is changing, who it helps, and what you can actually do about it without paying anyone a dime. And I'll tell you something else. The third change is the one that has surprised even longtime retirees I work with because it doesn't look like money at first, but it absolutely is. And I want to be clear before we go any further. This is not about panic. This is about making sure you are not the person who finds out a year too late that the system already owed you more than you got. So let's get into it. My name is Walter Barron. I'm a state bar licensed estate attorney. I've been doing this work for over 15 years. Mostly sitting across from regular families in county offices, probate hearings, and benefits departments where the rules are written in language nobody actually speaks at home. And I've seen the same pattern over and over again. People who worked hard their entire lives, played by the rules, and still ended up missing money they were legally entitled to because nobody ever slowed it down and explained it in plain English. And I don't say that to sound important. I say it because I've sat with widows who had to choose between medication and heating. I've sat with retired couples who thought they were doing fine, only to discover they were leaving hundreds on the table every single month. And the painful part is, it was never because they did something wrong. It was because nobody told them what changed. Now, I know what you might be thinking right now. You might be saying, Walter, this sounds like it's for people with complicated finances. I just have Social Security and maybe a small pension. This probably doesn't apply to me. And I want to stop you right there because that belief is exactly why so many people miss this. This is not for wealthy investors. This is not for people with accountants and portfolios spread across 10 accounts. This is for the exact opposite. This is for people who depend on fixed income, who own a home or are renting, who are trying to make every dollar stretch without feeling like the system is quietly pulling the rug a little further away each year. And if you are renting, listen to me very carefully. You are not excluded from this. In fact, in some of these changes, renters are the ones who benefit first. So don't tune out thinking this is homeowner talk. It is not. Now let's talk about the first change, because this one is showing up in Social Security statements in a way most people are completely misunderstanding. What's happening right now is a recalculation adjustment tied to inflation patterns from the previous cycle, and I'm going to translate that into plain English. When prices go up faster than expected in certain categories like food, medical care, and utilities, Social Security doesn't always catch up immediately. Instead, they adjust in the following cycle. That adjustment is what many seniors are seeing reflected in their 2026 benefit updates. But here's the part that bothers me about this. A lot of people see a slightly higher monthly deposit and they think, good, they finally gave me my raise, and they stop there. And before you skip past this one, let me tell you why that thinking can cost you. Because in several cases I've seen this year, there are back adjustments being applied for people who were underpaid during earlier inflation mismatches. That means a lump sum correction is being added quietly into account reconciliations, not advertised loudly, not mailed in big bold letters, but embedded in notices that most people skim over. I had a client, Margaret, 74 years old, widow, lives just outside a small county office district. She came in because she thought her bank statement was wrong. She kept seeing a slightly higher Social Security deposit for 2 months than a separate small adjustment. She almost ignored it, and I told her, don't ignore that. Go back and ask for the full benefit recalculation history. She did. And what they found was that she had been underpaid during a prior adjustment cycle due to a clerical classification error tied to her earnings record. Nothing dramatic, nothing obvious, just paperwork lag. The result was a retroactive correction of just over $4,300 spread across adjustments and catch-up payments. And here's the key point. She would have never known if she didn't ask the right question at the right office. Now I can hear you saying, that sounds like luck. It is not luck. It is knowing what to ask for. And here is what you need to understand. If your Social Security amount changed in 2026, even slightly, you are allowed to request a benefit breakdown review. That means you ask them, in plain language, can you show me if my record includes any retroactive adjustments or recalculations tied to inflation updates or earnings corrections? That one sentence matters more than people realize, because it forces a human review instead of just accepting the automated update. Now let's move to the second change, and this one is even more important for people dealing with prescriptions or chronic health conditions. There is a continuing expansion in Medicare drug cost protections that began rolling earlier, but what is being finalized and enforced more broadly in 2026 is the out-of-pocket cap enforcement across more drug categories and more plans. Now I'm going to slow down here. This does not mean every prescription is free. That's not what this is. What it means is this. Once you reach a certain yearly spending limit on covered prescriptions, your plan is no longer allowed to keep charging you copays for the rest of the year for those covered drugs. That limit is now being enforced more consistently across different plan structures, including more Medicare Part D variations and supplemental arrangements. And here is where people are still getting hurt. They assume their plan automatically applies it correctly. It does not always happen automatically. I had a client named Robert, 69, heart medication, diabetes medication, and a blood thinner. He was paying steadily every month, never missing a payment, just accepting the receipts. He hit the annual threshold mid-year and didn't realize it. His plan did not correctly flag the cap transition in time. He overpaid by nearly $1,900 before a pharmacy clerk actually noticed the pattern and told him to call the plan administrator. And when he called, the answer was simple. Yes, you should not have been charged after that point. But nobody refunded it until he formally requested a reimbursement review. That is the part almost nobody is told. You don't just benefit from the cap, you sometimes have to trigger the correction. And I want you to remember this sentence if nothing else from today. Systems do not always correct themselves unless you ask them to. Now the third change is the one that hits homeowners and long-term renters in a different way. And this is where I see the biggest emotional relief when people finally understand it. There are expanded senior property tax relief adjustments being rolled out unevenly across counties and states in 2026. Some places are increasing exemption thresholds, some are expanding rebate eligibility, and some are quietly updating income qualification limits that had not been touched in years. Now before you think, that doesn't matter because I already pay what I pay, let me stop you. Because this is not just about lowering a bill, it is about qualifying when you didn't qualify before. And here is what happens in real life. A person applies 5 years ago, gets denied because their income was a few $100s too high, and never applies again. Then the rules change quietly. The threshold shifts. But nobody sends a personal invitation saying, hey, you now qualify. That's not how it works. Now stay with me here because this is where it gets important. I worked with a man named James, 77, retired mechanic. He owned his home outright but was struggling with rising property taxes that had crept up over time. He told me, Walter, I don't qualify for anything. I already checked years ago. And I told him something very simple. Checked once is not the same as checked recently. We pulled his county records. We checked the updated exemption criteria for senior homeowners in his area. And it turned out the income threshold had been adjusted upward to reflect inflation over multiple years. He now qualified for a partial exemption that reduced his annual property tax by about $1,100. Not life-changing in a flashy way, but absolutely life-changing when you are on a fixed income and every month matters. And here is the quiet truth about this third change. It is not automatic in most places. You have to re-verify or reapply in many counties, even if you were previously denied or even if you think nothing has changed. And I know that feels unfair. I agree with you. It should be automatic, but it isn't. So if you take nothing else from this, take this. If you have not checked your local senior exemption or rebate eligibility in the last 12 months, you are operating on outdated information. And outdated information costs money. Now let me tie this together for you because these three changes are not separate in your life. They stack. A small Social Security adjustment here, a prescription cap correction there, a property tax reduction you didn't know you now qualify for, and suddenly we are not talking about pennies. We are talking about real breathing room, but only if you act. And I don't want you to feel overwhelmed by that word act, because I'm going to make it very simple for you right now. First, for Social Security, you call your local Social Security office or go through your My Social Security account and request a benefit breakdown review. You ask specifically if there are any retroactive adjustments tied to inflation recalculations or earnings record corrections. Second, for Medicare prescriptions, you call your plan provider and ask them one direct question. Have I reached my annual out-of-pocket cap, and have all post-cap charges been correctly stopped or reviewed? And if you suspect overpayment, you request a reimbursement review. Third, for property tax relief, you call your county tax assessor's office. You ask them, do I qualify for any updated senior exemption, rebate, or income-based relief programs in 2026? And if they say no, you ask them to check the updated 2026 criteria anyway. And if you feel unsure doing this alone, there are free help services. In most states, there is a SHIP office. That stands for State Health Insurance Assistance Program, and they help seniors understand Medicare paperwork at no cost. County Aging Services offices also exist specifically for this kind of support. You are not supposed to guess your way through this system. Now, I want to leave you with something important. None of this is new money in the sense of winning something. This is money that was already built into the system for you, based on rules you already qualify under, based on work you already did, based on a life you already lived. It is yours. And if there is one thing I've learned sitting across from families for all these years, it is this. The people who miss out are not the ones who are careless. They are the ones who assume the system will automatically correct itself. Sometimes it does, but often it waits for you to ask. Now, I know this might feel like a lot, but you don't have to fix everything today. Just pick one of these three things and make the call. That is enough to start. And if this helped you understand something that was never clearly explained before, there is another video on this channel where I go into how to avoid common benefit reduction mistakes that happen after retirement age, and I think you will want to see that next. And if you know someone over 65, someone who lives on Social Security or a pension, do not assume they already know this. Share it with them. Because sometimes the difference between struggling and steady is just one conversation. Now, before you go, one last thing. This is general education only, not personal legal or tax advice. Rules vary by state and income, and you should always confirm your specific situation with your county office, your state SHIP office, or a qualified professional before taking action.